Hey, good morning, everybody. Welcome out to this morning's tax sale training webinar. We like to do these Saturday morning workshops here. Let me make sure this is working properly here so you guys can see our screen right. That looks right. And you should be able to hear us properly. We're recording right here. I'm Ferre, and I'm sitting here next to Swenson. And yeah, this is the Saturday morning workshop. We've been holding these for the last couple of years, at least.
Yeah, and we try to hold them about once a month, and you know, each month we try to go over a different topic of tax lien and deed investing. Some of them are more basic. We have all kinds of different people that attend these. So we probably have people here that are brand new that have never heard of tax lien and deed investing. This may be their first opportunity, or we may have people on the line today that essentially have maybe attended one of these in the past.
Yeah, we could have some seasoned pros here with us that have been looking into training for a long time, or have been looking into tax liens and deeds for a long time. Either way, we tend to get a lot of those that have been studying it for a while, because we've got so many different YouTube videos that are out there about the topic, and so we attract a lot of different tax sale investors over time. And we're guessing that most of you already know who we are, but if you don't know who we are, Steve and I are cousins. We basically grew up together in the same neighborhood, and learned about tax liens together. I guess, Steve, if you want to tell them about learning about tax liens as a real estate agent.
Yeah, well, essentially, I became a real estate agent at 21. And as soon as I became an agent, my broker invited me to come out and attend an auction, and it ended up being a tax deed auction. And so that was kind of our first experience with tax sale investing. After I saw the chance to pick up property for less than market value, I was pretty intrigued by it. And so we started studying it, and eventually started working as coaches and trainings for different seminar companies, in regards to tax sale investing, tax lien investing. And so,
yeah, we actually, in the beginning, we wanted to learn how tax liens and deeds work so bad that we went and worked for seminar companies, because we could get access to their free training materials. Because at the time, we thought their training materials must be really good, because they were selling them for a lot of money. And we were trying to learn the investment at the time, and it was not easy. And so we thought that these training programs might be exactly what we needed to find, in order to learn what we needed to learn. But what ended up happening was, when we got our hands on the materials, we realized that they were terrible.
Yeah, it was pretty disappointing when you're looking at an expensive $2,000, $3,000, $4,000 program, and you still can't, by going through it, understand really what tax sale investing was. And so that's where we kind of decided to create our own program, where we go and essentially figure out how this works through trial and error, through studying state law, through working with investors and coaching other investors and doing investments ourselves. And so eventually, long story short, in 2007, we created our own program. We started working with many of the large seminar companies across the country, providing training material. We provided books and trainings for TV infomercials, and really was primarily a fulfillment provider, where we provide our training and our programs and our methods to seminar companies for their company.
Yeah, we were basically just private labeling materials for them, and we did that for a long time. But eventually, we decided to do it on our own. We didn't like not being able to control the price, and ultimately, that's part of what we enjoy about this. Is we enjoy the teaching side of it, and we understand that it's something that shouldn't have to cost you a fortune in order to learn, and that's part of what we've tried to set up and structure, was so that people could learn how to do it without spending a fortune. And so that's a little bit about who we are. But if we're talking about why tax liens and deeds, I think the more that when we got into tax liens and deeds, we immediately knew that there wasn't a better option out there when it came to real estate. When it came to some of the investment options that people have, the more we learned about tax liens and deeds, the better they got.
Yeah, that's definitely true, and especially as we started understanding it more, working with investments, purchasing liens and deeds. And what we kind of want to do for today's training is we just want to go through quickly kind of the basics of tax liens and deeds, because what we want to do with the majority of the time today is actually go online and look at upcoming tax lien auctions, tax deed auctions, evaluate property, kind of take you through the process that we go through when we're researching upcoming auctions and lists. And so essentially what we'll do is we'll just go through and kind of explain tax liens, tax deeds, redemption deeds, what they are and how they work. And then we're going to spend a majority of the time actually going through and researching upcoming properties.
Yeah. Now, part of the reason why tax liens haven't been embraced across the country, as being a fantastic investment, was because they are complex and difficult to understand, and there is a lack of uniformity in the country. And part of that is because how each state decides to handle their property tax collection is something that's dependent upon their state laws. So every state, you've got 50 different states that have their own laws about property tax enforcement, and not a lot of uniformity between how these different systems operate. It can be confusing to learn. What we eventually did was we were eventually able to we learned about each state, and we were able to figure out that there were a total of about 3 systems that were in use in the United States. So if you could learn these 3 systems, you could pretty well understand tax sale investing anywhere. And those 3 systems were tax lien certificates, tax deed foreclosures, and redemption deeds.
Yeah. So, essentially we could determine tax liens and tax deeds, and then we found this other group of tax sale states that weren't really tax lien states. They weren't quite tax deed states. And that's really where we kind of coined the term redemption deed to describe states like Texas and Georgia that are set up a little bit different. And what we'll do is go through and talk about each one of these, and then actually go through and look at some upcoming examples.
Okay, so if you're new to liens, if you're new to tax lien investing in general, one thing that's important to understand is that there are several different types of investments that are involved. When you're buying tax liens, we're not talking about a real estate investment so much as we're talking about earning money, earning a high interest rate return safely. Okay. What exactly is a tax lien? Well, if you're delinquent with your property taxes, one of the options that local governments have is to place, if they use tax liens especially, is to place a tax lien against your property. Now, what that lien does is it prevents the owner from being able to transfer the ownership of the property. So you can't sell the property as long as that lien is against it. But most importantly is it's going to give the county a way to collect the money that's owed to them immediately. That's the only thing that's ever important to these counties, really, is just collecting the property tax revenue that's owed. And so creating a tax lien actually gives the county a way to do that. So on the one hand, they prevent the owner from being able to sell the property, but they also create this lien that they place against the property. They can sell that lien to investors because the lien is set out to pay a high interest rate return.
Yeah, I mean, that's the advantage of tax lien certificates. Essentially, a tax lien is going to give you 2 things. It's going to give you a guaranteed interest rate return, and like Shade said, a lot of those times those are going to be double-digit returns. And it's also going to give the property owner a redemption period or a time frame to essentially pay back the debt. So you're paying the county essentially. You're loaning the county in a way the money. They're giving you a tax lien certificate, and now that property owner has a time frame, a redemption period to pay you back. So that property owner can pay you back anytime within that redemption period. They may pay you back 2 months later. If the redemption period is 2 or 3 years, they may pay you back 2 or 3 years later. But if they haven't paid you back by the end of the redemption period, then essentially what that tax lien certificate does is it has foreclosure rights. So that gives the lien holder, the investor that bought that tax lien, the opportunity to foreclose on the property if the property owner hasn't paid them back their money and their interest rate return.
Yeah, now just a couple of things that are important to note about tax liens are, number one, the tax lien itself is a first position lien, meaning that it can take priority or precedence over any other kind of lien or claim against the property. It's a government issued lien, and it has to work that way in order for the property tax enforcement system to work, but they have tremendous power. And the other thing about tax liens that that investors should note is that they're really easy. Okay, they're really easy. They're relatively easy to purchase. And once you purchase them, 95% of the time they redeem. What that means is that you don't have to do anything except for sit back and wait to collect a check in the mail from the county when the property owner pays off their delinquent penalties and fees. When that happens, the county will just redeem the lien and will cut you a check and send it to you in the mail. So part of what people like about tax liens is their simplicity. The majority of the time you can buy the lien without too much due diligence and research, and then sit back and wait to collect a check in the mail. If by chance that doesn't happen, you can always use the lien to pursue foreclosure. But the majority of the time, though, you just sit back and collect checks.
Yeah, I mean, tax lien is an alternative to something like the stock market, where it could go up one day, go down the next. With the tax lien certificate, you know exactly how much you're going to earn when you invest in the tax lien. The only question is, are you going to hold the tax lien for 3 months or 6 months or 2 years? That's really the only question that that you would have. And so once that property owner pays it back, essentially you're going to make your money. You're going to make back that higher interest rate return. So the property really acts as collateral for your debt.
Now, yeah, you kind of see that right here on these ones.
Yeah. Here's 4 good examples of some over-the-counter tax liens that were available on one of our over-the-counter lists on the website. And you can see that, here's 4 different properties here. These properties aren't necessarily, flashy or maybe sexy, but they do have incredible value versus the amount of the tax lien certificate. So, you can see they range from about $400 up to maybe $1,500.
Yeah, and they're placed against properties ranging from value at $55,000 up to $89,000 roughly. And that's indicative of the way tax liens are supposed to work. They're generally a small percentage of the property's value. And again, it's because you're not buying anything with the property. You're just buying this lien that's been placed against the property that nearly everybody pays off. That's the way that tax liens are supposed to work. They're supposed to redeem. But if you're after real estate, if property acquisition is what you want to do, then tax deeds are really the method that you should pursue. And that's because in tax deed states, what we have is just a little bit different. The county simply waits out a redemption period to foreclose on the property rather than issuing individual liens on the property. They basically wait out a time period, and when it's over, they foreclose on the property. So when they hold a sale, they're auctioning off the properties that they foreclosed on because they haven't collected delinquent taxes. It generally takes years and years before this happens, but at the end of it, you're selling off properties at an auction.
Yeah, like Shade said, essentially the county is going to foreclose on the property, and it's going to offer that property up at the auction, starting at the delinquent back taxes. So, if it takes 4 or 5 years for the property to be, to go through the foreclosure process, then essentially it's going to be 3 or 4 years, 5 years, whatever that is, of delinquent property taxes. So when you're buying tax deeds, you are buying real estate. You are buying the property itself. There's no waiting period. There's no redemption period. You own the property once that hammer, that auction hammer, pounds down, or you win the bid online, or however you purchase over the counter. Now, here's 4 examples of properties that were purchased by some of our coaching students over the last, 60 days or so, 90 days. And you can see that there's, several different types of property that we have listed here. You can see that in the top left-hand corner, that's a property that was essentially 27 acres. So it's a very big piece of land, that was picked up for $30,000 and has a value of about $300,000. The property on the top right was, actually a commercial property that one of our students purchased, one of our coaching students, and it was essentially a parking lot, or right there, in a commercial area, and was able to make a good $10,000 profit on that. And one thing that's crazy about tax deed investing is there is opportunity, like on the property in the far right hand corner, to go out there and find property for under $1,000. So 100, 500. There's these different types of opportunities out there for investors to acquire property for literally pennies on the dollar.
In fact, it's one of the things that we specialize in, specifically with our coaching students, is places that will sell property for less than the taxes owed. This is kind of a unique phenomenon that you can find in certain tax deed states. And basically what's happened is if you have properties that were offered at an auction but that weren't purchased, they end up going back on the record in the county, and in the county inventory. Basically, they become state-held land in a way because the county hasn't been able to sell them yet. In some places, if this goes on long enough, eventually the county will begin to entertain offers on the property less than what's owed. So if there's $2,000 owed in delinquent taxes, at some point the county forgets about that amount, doesn't matter anymore, and you can pick up the property for less than than what is that's owed, which is where we can find deals where you can pick up properties for as little as $100. It's basically a land giveaway. But it exists in a lot of places, and it works out really well for a lot of investors because there's no real risk associated with buying land for $100. It's basically like, it is like a land giveaway. You can turn around and sell it for any price you want.
And they can kind of do it two different ways. There's some states that go ahead and offer them through over the counters, but then there's also states that they don't really sell over counters that way, and so what they'll do is they'll have resales. Or maybe they do sell over the counters, but this is a way to get rid of them. And so we've seen resales in California, even where properties have started at $100 or $500. Michigan will have resales that start at $100. And so in fact, we added a couple to our, last night when I was looking through the online auctions, I added a couple for some, upcoming auctions that could be possibilities as well. So if you're looking to acquire real estate, regardless if that's through a live auction, some type of online auction or over the counter, it's definitely the cheapest way to acquire property.
Yeah, you're not going to find a cheaper way to purchase land, purchase property, period, than tax deeds. Redemption deeds are kind of a weird hybrid between the two. They're similar to both tax liens and deeds, and there's only a handful of states. There are 3 or 4 redemption deed states, just not that many. But basically, the idea behind it is that you're buying a tax deed that has a redemption period attached to it. So if you were to buy that property, it's like buying the property, but you don't have the power to sell it for the first 6 months, let's say. You have to wait for that time period. During that time period, there's a chance it could redeem. That's kind of the way that redemption deeds work. If it does redeem, you're going to get a good flat interest rate return. If it doesn't, then everything with it is just like a tax deed where you acquire the property, you can sell it.
Yeah, like Shade said, they're a lot like a tax deed, but they have that redemption period, that's going to be attached to it. One thing that also makes redemption deeds unique is most of them are going to have a penalty rate versus an interest rate return. So when you're buying a tax lien certificate, if you're earning 18%, that 18% is going to be broken over 12 months.
Yeah, it accrues at a rate of 1.5% per month.
Yeah, exactly. So, as with the redemption deed, if you're investing in Texas, for example, you're going to make back a flat 25% penalty, regardless if they redeem 1 day after the auction or 6 months after the auction. Either way, essentially, you're going to be getting that same flat return.
Yeah, these are some examples of redemption deeds. I think these are in Texas, right?
Yeah, this was for just an upcoming auction. Went through and looked at some of the properties that were coming up for sale. And essentially, you can see the different bid amounts. Now, that bid amount is not necessarily what it's going to sell for, because it is going to be an auction format. And that's one thing that redemption deeds are different as well. With the tax lien, you're usually bidding down the interest rate or something like that. With redemption deeds, you're bidding it up just like you would with a tax deed. So it's going to be like an auction like eBay or anything else. You're going to start at that, if we're looking at that top property, at $44,910, that's essentially where the opening bid is going to start. Maybe it ends at, maybe there's opening bid, maybe it ends up selling for $10,000. Whatever that amount is, essentially, that's where you purchase it, wherever the high bidding stops.
Yeah. Okay, so those are the 3 systems, that are in use in the United States. Beyond those 3 systems, there are basically 3 different ways that you can buy, 3 different ways to invest. There are live auctions, online auctions, and then over the counter, which basically means you're buying it directly from the county after the sale.
Yeah, exactly. So, it's pretty self-explanatory, what each one of these are. With live auctions, you're attending a county courthouse and bidding there in person. With an online auction, you're participating in an online sale. And then with over-the-counter, what over-the-counter is, for any of those investors that are just getting started may not know, essentially these are tax liens or deeds, redemption deeds, that didn't get sold at the auction and that are now available directly from the county after the sale.
Yeah, in fact, why don't we, our favorite thing to do during trainings is to be able to just show you guys live training. That's weird. Something happened to my desktop. But let me get this view switched up here so that we can begin. We're going to go and just check out some different liens and deeds that are available. Let me log out of this setup here.
Yeah, so what we want to do is we want to go check out some upcoming tax lien auctions, some tax deed auctions, and just kind of go through the process of evaluating properties, looking at properties. Of course, during this call, we don't have the time to go through and do full due diligence research, but we're going to try to check out as many different auctions and as many different properties as time permits. And so, we'll go through and probably look at some upcoming online auctions, because those are the type of sales that everyone can participate in. You don't need to be there live in person, and look at some of the opportunities that are coming up. So what we usually do, in fact, we do this even when we're going to look ourselves, we just go to our website, taxselfsupport.com, and you can see the auction calendar here. But for this particular one, we're actually going to go to the online auction center, and then we'll go ahead and should we look at tax liens first or tax deeds?
We've got tax lien auctions coming up here pretty fast.
Yeah, let's check out them, and then we'll go look at some tax deeds. So essentially, with the tax lien auctions coming up in the month of February, actually they've already started in some areas. Arizona has their tax lien auctions, and so we can see here on the website, one thing we post is all of the online auctions and all of the, we usually post between 400 to 500 auction lists a month. Let's actually go look at that county. And we'll go ahead and check some of the upcoming auctions. So this here is an
online auction site for tax liens for Coconino.
Yeah,
if I'm saying that right.
So essentially, this is their online auction website. If you wanted to go ahead and participate in it, you would start there, register. But we're just going to go check out some of the tax liens for sale. Now, one thing that's nice about an online auction is it's pretty easy to essentially view what the properties are, because there's going to be links attached to a lot of the property.
Yeah, so in Arizona, the way that Arizona works with their tax lien sales, the maximum interest rate return you can earn in Arizona is 16%. And the liens are sold with a 3-year redemption period. So we're looking at all these properties here. We can see that these are all for 1 year of taxes. Basically, the tax year is for the 2017 year of delinquent taxes. That's what they're selling off here, and we can see the face amount here. This is the face amount of the lien. It's the current amount of the lien and what is owed. So if we were going to buy it, this is the amount that we would pay right here for these properties. Now, if we wanted to look and see what some of these properties are, we can click on the parcel ID link they've got right here, which will pull up a portion of a county record here for us to tell us a little bit about the property. It's not going to well, we don't need to know a ton about the property. Primarily what we're looking at is that $3,000 amount and what is securing it. And so if we can see that the property is valued at nearly $400,000, it looks like it's a single family home.
Yeah. A lot of the times, some of these counties will actually have images of the property on there as well. But in looking at the property with tax lien certificates, because we're not buying the property, we're just purchasing a lien against it, we don't need to do the same type of due diligence that we would with the tax deed. But in looking at a $3,000 lien that's placed on the property that has, a value of $400,000, overall that looks pretty good. Now from here, what we could do if we wanted to find out more about it is, look at that site address, the 404 East Cherry Avenue there in Flagstaff, and take a look at the property on Google Street or Google Maps to see if we could see a street view on it. We could also check the property on Zillow as well to see if it comes up with the Zillow value, and make sure everything looks good. When we're looking at properties, usually the overhead image is at least within 6 months to a year old. So if we don't see any roof caved in or anything like that, then overall, it's gonna, as long as the property is not burnt down, and even then it could still be worth it if the land.
Yeah, well, $3,000, and this being valued at $400,000 right now, I'm sure that at least $100,000 of that's got to be the land. If they're valuing it at 400, then a portion of that's improvement value, a portion of it's going to be land value here. But we can see it's a single family home, and the images on it, it's a 2009 image, so it's kind of an old image here of the single family home. But yeah, 400,000, we wouldn't worry about it at all.
No,
this would be easy to buy.
And I'm sure it probably has a pretty good value with Zillow as well. I'm sure it's probably over the 400,000, I would think.
Yeah, I'm sure it's probably well over the value in there. So we really, oops, wrong one here. I'm gonna go to Zillow.
Now, when it comes to these tax lien lists, some of them aren't going to have a huge amount of information on the list. So, how we're going to determine which tax liens we look at or which ones we bid on are, might have to do with price of the particular tax lien.
Oh yeah, this particular property, we just pulled it up on Zillow real quick to look too. They've got an estimated value there of $531. You can see it's for sale. All that stuff is actually more than we would even need to know.
We see inside photos of it.
Yeah, we can see the inside photos if we wanted to get more details on the property there. But all that stuff's really not important to us because we know that we're not buying the property itself, and we're almost certainly not going to acquire the property because it's only $3,000 owed in delinquent taxes, and that property has so much value that chances are somebody's just going to pay it off.
Yeah, exactly. But in looking at an investment standpoint, is your $3,000 protected? Well, absolutely, it's protected. It's protected by $500,000 worth of potential real estate. So your $3,000 is going to be protected. Chances are they're going to go ahead and pay you back. But there's all kinds of different liens in here, and the price of the lien doesn't necessarily always mean that it's going to be a great tax lien, or the low price doesn't mean that it's always going to be a bad tax lien.
Yeah, like let's see what the $82 lien is against here. Oh, and see, like this lien's against, it's a partial lien. So this lien for $80-something is placed against a property. It looks like it's still in the construction phase, or at least it was during the photo.
That was, when was that? 2012 something?
Yeah, I can't quite tell with that. But we can see though that the value is super high on the property. What happened here was that the majority of taxes were paid, but there was something left over. That's what we call a partial lien. When you see a lien like this where it doesn't reflect the value of the property at all, $82 owed and $600,000 property, it's because of something odd like that, where there was a leftover balance with the property, and so you're not even dealing with a full lien amount there. You've got just a small amount of taxes owed against a property, but it's still going to use the entire property as collateral. So you still have $565,000 property that's collateral for your $82 lien here.
Yeah, at $600,000, $500,000, the property taxes were probably $3-4 grand a year. So they probably paid, if their taxes were $4,000 and they paid $3,920, they'd still owe $80, and so essentially that $80 is going to create a lien, even though it's only $80.
Yeah. So, there are a lot of opportunities with the upcoming tax lien auctions. And if you are looking for an easy way to earn high interest rate returns safely, then tax liens are a good way to go. They work really well as a long-term investment because you can't really control the duration. You can't control when that person pays off their delinquent fees. It could happen right after you buy the lien, or it could happen, past the redemption period as you're trying to foreclose on the property. It can happen at any point there.
And one thing to mention is when you're buying tax liens like this here at the auction, you're going to have that full redemption period.
Yeah.
So, the redemption period is going to essentially start on the day of the auction or the day the tax lien was sold. So, if the auction ends on February 22nd or 15th or whatever it is, essentially that's when that redemption period is going to start for that tax lien certificate. So in Arizona is 3 years. So essentially the property owner could pay you back, 6 months later, but they could go all the way to the point of taking 3 years to be able to do that. So you don't want to put funds into a tax lien certificate like that if you know you're going to
there's a chance you might need them. They're going to be definitely long-term investment funds that you won't need for any particular reason. So, but it works really well if that's your primary objective, is to earn a high interest rate return safely. There's not an easier way to do that. If you're trying to acquire property for good prices, then tax deeds are going to be the way to go. And your online auctions with tax deeds are going to have a ton of opportunity because that's where a lot of the best properties are going to be offered. Plus, this is a place where you can participate in the auction regardless of where you live.
Yeah. Let's go ahead and click on the tax deeds and we can check out. We can see, California has some, and we'll go check out some in Florida as well. But let's go ahead and check out. I was looking at this sale earlier this morning. In fact, one way, when you get, kind of depending on the auction list and the type, sometimes if it's a larger auction list or I want to get a quick view of it with using Grant Street Group, I like to download the Excel version, versus trying to go through and look at all of these individual auction folders that can take a few minutes. I just want to quickly get an idea of, is there property available on this particular auction, and then I can go in and do some more research on the individual properties on the auction page.
Yeah, but let's take a look at this.
But if we're looking here, we can see, a bunch of properties listed here, and we can see some of the stuff over here in the notes, information. But we can see that there's a bunch of addresses listed right around here. And I just started looking at some of these properties.
Let me zoom in a little bit more.
Yeah. So, I could see some of these ones like, starting at 23 grand, 16 grand. I started looking at some of these properties and started just pulling up to see what they were.
Yeah.
So let's go ahead and do that. We could check out that one for 23. I think if we just copy that, I think it'll probably pull up on Google.
All right, let me get that.
And there it is. It's that first one. So we see, $23,000 opening bid.
Yeah, it's a single-family home.
Yeah, single-family home. We could take a look at it if we wanted to. We can also pull up that address or copy and paste the full address and do a Zillow search as well to see what type of value it is. So with this, we're not researching the county records yet. That's something that we'll do here in a minute. We're just trying to quickly go through the list and see if there's potential investments and see if we want to spend more time in researching this list.
Yeah, so here we've got the property valued at $431,000. So the $23,000 opening bid is really, it's about 5%. Well, it's not even 10%. It's probably closer to 5% of the property's estimated value. So a lot of potential there for profitability.
Yeah, should we check out another one?
Yeah, you want to look at the same cell?
Yeah,
let's see. Let me switch this over. All right.
You know, we might even be able to go and look in the online records as well, because they're not too far down. But I just wanted to kind of show how there was, you could see that there's quite a few properties there, you know, on this list that could be potential good investments.
Oh, hold on, wrong thing there.
It's probably only the 6th or 7th one down where they start, but
yeah. Let me get this thing. There we go. Okay, so if we're looking at the auction folders here, the actual online auction folders are handy to use because you've got a lot of the information accessible and right there available to you online. So what we're down 6 properties there. And let's look. Yeah, I think they'll probably start right around here. So here's one current bid on at 16,600, and let's see what the property is.
And we have the address there.
Yeah.
And they have some of the parcel terms and things there.
Where's the value at here?
I don't know if they have it listed here. So, sometimes, you know, they don't have a ton of information right here, and that's where we kind of do just a quick search on, you know, Zillow or Google is going to be quicker to see if it is a structure, you know, sometimes.
Yeah, it says they have parcel images, so it will.
I was having a hard time pulling it up earlier when I was trying it.
Yeah, it looks like it's still struggling to do anything. Maybe it will.
I couldn't get it to go past this.
Yeah,
spend too much time on it.
Yeah, it looks like it's not, but we can at least look at the property if we wanted to see what it is. This one that starts out at 16,000. And another single family home we can see here. Yeah, it's this house right here. And value on it, I'm sure, is going to be pretty high. I mean, it's got to be 300,000, I'll bet.
Yeah, and you know, once we've determined we have some properties here that we're interested in, that's where we're going to go through and do the full due diligence. You know, a lot of times people will hear that you can buy properties free and clear, you know, of mortgages, and that's completely true. In most tax sale auctions, tax deed auctions, as they go through that tax deed foreclosure, essentially that's going to eliminate any mortgages or judgments or liens against the property. But something that could stick to the property is some type of other governmental lien, like a city cleanup lien or you know, an IRS lien or something like that. And we can see which properties on the list have IRS liens, so that's something that, you know, we can determine beforehand. But something like a city lien could affect it, and so that's where we'd do the due diligence beforehand, also determine out the property's value, estimate the repairs. You know, there's a lot that's involved when you're investing into structured properties with tax deeds, and that's part of the reason as we start with our new students. A lot of times we'll start with pieces of land just to kind of take them through that process and get them familiar before we start tackling structured properties.
Yeah, it's interesting. You know, the Excel version of this tax sale list that's on Bid for Assets, that's an online list. The Excel version of it does provide us with a lot more information than even the online version of the list here, at least in a format that makes it easy for us to view it, because we can see additional information about the property here. I mean, yeah, we've got the IRS lien, you know, thing right here that tells us at least if there's an IRS lien, but it also tells us in some cases, you know, what the property tax rate is, you know, $7 per thousand on the sale value. You know, gives us some details here about the property. There's the Excel list can be pretty handy when you're just trying to get an overview of what the auction has available. And the other thing that happens with these auctions is that the closer they get to the date of the sale, the more the auction list changes, because you have properties that are redeeming all throughout this time period. You know, these are properties that are about to be lost to foreclosure, you know, that the county's trying to collect money on. So obviously there are going to be parties here that are trying to, you know, prevent that property from being foreclosed on and want to pay off the tax bill. So you'll have properties drop off the list right before the auction, which is something else you have to learn how to work around when you're doing due diligence and research, because you don't want to waste a lot of time on properties that are not available.
Yeah, and one thing we like to do if we were able to pull up an Excel list like this, and it kind of depends on the size of the auction. I mean, if there's only 5 or 10 properties, an Excel list isn't going to be that helpful. But as the list gets bigger, one thing we like to do is bracket, and that's something we teach our students on through our membership, is how to essentially bracket investments. So if you only have $30,000 to invest, or 20,000, then you can go ahead and eliminate, these properties that are 300 or 100 or 80 or 162 or whatever.
Yeah, you can basically eliminate about half or 3/4 of the list, just by trying to focus in on those that are within a certain price range.
Yeah, so we may go ahead and delete them. Sometimes we'll highlight them depending on the list, but we may highlight the properties that we're interested in. And so as we go through and look at this list beforehand, maybe there's 3 or 4 properties that we're interested in, and we'll go ahead and highlight those. And as the auction gets closer, then we'll keep an eye on those. And then as the auction starts getting really close, within a few days, we'll start doing those full due diligence where we're researching the property for any potential investments, and then also determining the value.
Yeah, we ought to talk about too is a little bit about over-the-counter investing. That's something that we we personally love over-the-counter investing, but it's a different style of investing from standard tax lien and tax deed investing in a way. We're talking about properties that we can go after and pick up that are directly from the county, that are sitting on the county record. So we're talking about state-held land. And what that means is that we've got to do a little bit more sifting and searching, because there might be a lot more junk that's in that list. So we're trying to find the diamonds in the rough. We're basically trying to find the properties with the most potential within those lists, because we can oftentimes pick them up for really cheap prices and still find properties that have a lot of value.
Yeah, definitely a good opportunity with over-the-counter investing, and that's kind of what makes tax sale investing nice. Is there's several different strategies that you can utilize through tax liens, tax deeds, and redemption deeds, and then there's also several different buying methods that you can utilize through live auctions, online auctions, and then the over-the-counter opportunity. One thing that we provide our students with and our members of tax sale support is essentially about 35 different states that offer some type of over-the-counter investing, whether that's tax liens, tax deeds, or maybe some type of land bank.
Yeah, in fact, we're seeing more and more of that. Even the land banks themselves are just a crazy thing that we've seen pop up here over the last couple of years, where you have some of these states that have this inventory of properties that they've been trying to sell. They've created land banks now, and what the land bank is it's a nonprofit organization that is set up to help the county sell off their land, and they're better at, because they're focused just on selling the land, they tend to be better at it than the counties are. Because the fact of the matter is, counties are just not very good at selling stuff. They're just not very good at attracting a lot of buyers or investors or getting people tuned into it. And so the land banks are a group that at least are more focused on selling, to help these counties get rid of some of the excess land they're sitting on.
Yeah, essentially they are nonprofit organizations set up by the county and owned by the county to distribute, tax defaulted and other types of properties that they essentially come across. So they could be donations and other type of properties in there as well. But a majority of them are going to be tax defaulted properties. That's how they acquire them. So there's going to be opportunities with a number of different land banks, but then there's also going to be opportunities through the county itself, and then also through some of these resales where you can pick up properties for less than taxes owed. So there's going to be definitely a lot of opportunity out there in the over-the-counters. The thing that you're going to come across, though, is you're going to be filtering through those bad properties to determine the good properties.
In fact, I was just thinking about something that we could look at for a second. Is we could look at some of the over-the-counter inventory in Mississippi for a second. And just kind of show everybody how that inventory looks, so that you can see, kind of what we're talking about here. In terms of the work that you do when you're going over an over-the-counter list. So let's see here. We've got this is an over-the-counter list right here for Hinds County, Mississippi. and meaning that these are all properties that are just sitting on the books right now, that are county held. We've got the market value of the property listed over, turn that thing off here, off to the right here, and then we've got some links we can click on to show details. But as we scroll down here, we can see, they've got 2,700 different pieces of land sitting in their inventory for just this county. Yeah. And there's a lot of other counties that are that are within this state that have a lot of inventory too. But if we were to go through this, we could start to look, and if we saw a property here that we were interested in, what we would do is we could start to look into it. We could look at the details with the property here and get stuff like the parcel number and some of the legal description, and then we could use this information to go and pull up a county website where we could use that information to pull up more details about the property, tell us more about what the property is, get a map view of it, and things like that.
Yeah.
So let's see here. But that's what the over-the-counter lists a lot of times for us are like. We're basically just going over large lists of properties that are like this, and we're trying to figure out which ones offer the greatest potential. We also love to find stuff that we can pick up for less than taxes owed.
Yeah, there's going to be a lot of opportunity in different states, and as the auctions happen, then there could be new opportunity for more over the counters. So we've essentially broken it down to where you can search by tax lien state, deed state, or redemption deed state, or the land banks, and pull up different over-the-counter lists.
Yeah. So I don't know if we want to look at maybe we could look at
some Florida.
Yeah, let's go look at some online auctions. Florida is an interesting state. If you've been looking into tax liens and deeds for any length of time, you probably have heard a lot about Florida or seen Florida come up many times. Florida has a unique system. They're unlike any other state. They offer both tax liens and tax deeds. So they basically are able to utilize both systems. And so if you wanted to if you want to buy tax liens in Florida, they have a maximum interest rate of 18% and a 2-year redemption period. But you can also purchase tax deeds in Florida through online auctions. The reason for that is normally if you go to foreclose on a tax lien, the lien holder can foreclose on the property and can become the new owner. In Florida, though, what happens if your lien goes over 2 years, then you fill out a form with the county to initiate the foreclosure process.
Yeah, exactly. And at that point, they'll go ahead and offer it up at a tax deed auction and then sell it at auction.
Yeah, so if it sells at auction, they use the proceeds from that to pay off the lien holders. So if you buy liens in Florida, your chances of acquiring the property are very low because they almost always redeem.
Yeah, and they're usually going to sell at the tax deed auction if they do go to auction, as long as the property, is a decent property and isn't necessarily, the opening bid amount isn't so high that it doesn't make it worth it to buy it. So, let's, I was looking earlier this morning in Brevard at the February sale.
Yeah, so in Florida, we've got a whole bunch of counties that do their auctions online. We also have a whole bunch of counties that still do their live sales. So they you have to do live in-person sales there. They also have their online auctions, and Brevard is one of the online auctions. And so we're looking here. We're going to look at their auction calendar, and
go ahead and click on February.
And for February here, we can see this is an upcoming sale that they have coming up here on the 21st. Looks like they started out with 69 tax deeds. They're currently at 46 of them, so they've had about 20 of them redeem. And we can see the layout here of the list on the properties. And what we've got here is the opening amount. It's the amount that's owed. And we've got the assessed value down below that, which makes it easy for us to do a quick bid to value ratio as we glance at the properties.
Yeah. So essentially, we can look at that opening bid amount of $4,900, assessed value of $50,000. So we're looking at that. Well, that's about 10 cents on the dollar. That's not bad opening bid amount, and there's value to the property. So we can go ahead and click on the parcel number to pull up the property records. We can also go ahead and copy and paste that address to look at the property location. Google Streets or Zillow.
Yeah, now depending on the county you're dealing with, some county records are more helpful than others. This particular county gives us an actual photo of the property along with the property record information that's attached to it. So we can actually access all of the information, right here.
And you can see they have a map view as well, a street view, some different views you can click on as well to see, different views of the property.
Yeah, and for the most part, this property would be, looks excellent there at that, with it opening up at $5,000, it would be a great property.
Man, one thing we could also check is the address, just to get an idea of essentially the property value, in comparison to the assessed value.
And so we could just check this real quick just to see what it says. We just want to get an idea of what the condition of the market is versus the assessed. And so we can see here,
close.
Yeah, the assessed on it, they've given it there 51, and the market they're saying is 56. So yeah, that is pretty close here. And that would enable us, or help us at least, when we're going to figure out what our maximum bid is going to be on the property, knowing what the actual market value of the property is. But we've got a lot of properties that could be good potential investments. I mean, at least we can see based on values, based on assessed values, based on opening bid amounts. There's a lot of opportunity just even in the first 5 properties here.
And you can see there are a bunch of different cities as well. That one's in Cocoa.
Yeah, Cocoa, Florida.
Melbourne, Palm Bay. So each of one of these a lot of them are going to actually be in different cities within the county, which some cities may be better than other cities. Some properties could be better than other properties. What we're looking for when we're acquiring tax deed properties is most important for us is going to be price. How much did we acquire the property for? A lot of times you'll hear people say, "Oh, I'd never buy a property in that neighborhood." And to us,
that might be true for a certain price.
Yeah, that may be true, but it's all going to be dictated in price. Even in a bad neighborhood, if you could buy a property or a home for $1, is that still a good deal? Well, somebody in that neighborhood's going to buy it. If it's a livable property, and so that's what's also most important to us. We're not as concerned a lot of times about the neighborhood or the location or anything like that. What we're most concerned about is what can we buy it for, and what is the property valued at.
Yeah, and if you stick to those numbers, I mean, if the numbers,
interesting property.
Yeah, little townhouse here, with a pretty low opening bid amount.
It's not all brick.
$3,000 opening bid amount is not too bad. And it might be worth I just want to see what they estimate the value on it. It might be just like the other property and be pretty close to what the assessed, or it could be a little bit better. Yeah, it is a little bit better, at 50,000. So really, there's some there's some profitability potential with that property.
Yeah.
Because it's valued at about 50,000, opening up at 3,000. So it's all a matter of what it bids up to. But there's a ton of properties here that would be worth looking into. Now, this one right here is a little bit interesting. You see that this one right here has an opening bid amount of 25,000 versus this assessed value of 55,000. It's almost 50%. The opening bid amount. And what that most likely is a property with a homestead exemption.
Well, let's go ahead and look at it. Probably see.
And what a homestead exemption is, if a property is owner occupied, it can qualify as for a homestead exemption. And what that means, it's basically a program that's set up to help property owners retain their property, even if they're struggling to pay off property taxes on it.
It lowers their property taxes as well. So
yeah, their taxable amount goes down.
Yeah, essentially, it could be usually, a lot of the times it'll be like a $25,000 exemption where they'll take the assessed value at 55,000. They'll take off 25,000 so that they're only paying $25,000 in property taxes versus 55,000. So it's a way for, essentially, it gives the homeowner more rights in the property. They've essentially done a homestead exemption on the property, it's their only property, their single family home property.
Yeah.
But what that does require is that requires when the property is foreclosed on that the opening bid starts at 50% of the assessed value.
The state laws basically dictate that, and most states have certain homestead property law exemptions or rules that apply to homestead properties. For instance, in Texas, they have a longer redemption period than the standard land. Here in Florida, the properties, homestead exemption properties are listed at 50% of market value. There's different rules of assessed value. There are different rules like that are in operation in different states, and that's part of what you learn as you start to invest in places, or some of the ins and outs about things like that.
Now, there's a good chance that this property could still sell even with the opening bid starting at 25,000 or whatever it is, because the assessed value could easily be worth more. So even looking at it, it's about 50 cents on the dollar there. But if the market value is an extra 10 or 20 grand, then suddenly still picking up property for 50 cents on the dollar in the Florida market is still considered a great deal.
Yeah, there are a lot of opportunities with this sale. We've got just a ton of great looking properties coming up, and a lot of them have.
There's a nicer one there.
Yeah, these two right here are pretty incredible. I mean, in terms of a bid to value ratio, really all three of these are
well,
really,
and they have a higher value too. That's 200 grand, but
yeah, let's take a look at this property. It opens up at 12,000, but it has an estimated value of 100 and.
It's got a good size acreage. It's on an acreage.
Yeah, 1.1 acres.
One thing that's also noticed is you can see there the site address and the mailing address are two different. So this could be, essentially a vacation property or a rental or a second property or whatever. Either way, we can see that the person that owns the property isn't living in the property.
Yeah. So what this property really represents is it has a really good bid to value ratio right now. A high value. So it only starts out at 12,000, valued at 182. And let's see if by chance, let's see what the value is they attach. And they attach a value of 267 on Zillow. And so with it starting at 12,000, the bid to value ratio on it's really low. What that does is it gives us the ability to bid that property up a bit. But if you could pick up this property for 50,000, for 80,000, it really, even at 150,000, it would still be a profitable deal. But this property has a lot of potential in it. You could easily pay, if you pick this property up for 100,000 or for 50,000, you could kill it really when it comes to the overall profitability with a deal like this.
Yeah, essentially, even at 100,000, there'd be $170,000 worth of potential profit to be had. So there's definitely a lot of opportunity with these different types of deals, even when the bidding gets a little bit more competitive. Sometimes if it gets competitive, what we'll have to do is we'll have to bid on several properties before we win one. But that's just the name of the game. If we're looking to get properties for, let's say, 25 cents on the dollar, and a bunch of the properties are bidding, the nicer properties are bidding between 35 to 50%, then we may have to bid on several properties before we end up winning the property that we want. But even in acquiring property, it's all going to be relative. So there's some markets where, picking up a property for, over the counter or through the auction for 5 to 10 cents on the dollar is a good deal. Where another market, if it's more competitive or a nicer area or considered a nicer market, then, picking up property for 25 or 30 cents on the dollar is considered a good deal.
Yeah.
It's all going to kind of be relative to the individual market.
Yeah, that's an interesting one there, because the value's at 244,000. The opening bid though is just 17,000. So you've got the best spread there, I think, of just about any of the properties we've seen so far. It looks like a nice single family home. Again, another one of those that has a ton of potential.
And also notice that the mailing address
is in Miami.
Yeah. So when we talk about these type of properties, when somebody gets foreclosed on, you're not kicking, very, very rarely, you're kicking families or something like that, little grandma on out onto the street. These are usually going to be properties that are secondary properties, or somebody has died, or they're usually kind of weird circumstances that essentially brought it to the point of going this far through the foreclosure.
Yeah. In fact, there are so many good opportunities to acquire property through tax sales right now, and the good news is it's only getting easier. The internet is simplifying the process, making it easier. The counties are wising up to the income opportunity that is presented to them with tax sales. Everything about this process is easier than it was 5 years ago or even 10 years ago. And a lot of these investment strategies simply didn't exist before the internet was around. So it is a brand new field of investing still, and it's constantly changing, but it's a really good time to get involved with it.
Yeah, definitely. If you're serious about getting started with tax liens or deeds, or really if you're just interested in learning more, there's not going to be a better and better value and a better opportunity than essentially our membership program.
Yeah, at least it's a good way for you to learn everything you need to learn, or to have access to everything you need to have access to invest without breaking the bank. You can join for $30 a month and have access to training, support. We do live webinars every week, plus our tax sale list inventory, which on the website, that's a big part of it. Trying to find tax sale lists can be time consuming and difficult. We try to save that time and provide those lists for you so that you can get straight to the investing side of things. But yeah, if you're looking to get started, the membership is a good place to begin, so that you don't have to spend a ton of money, but you can still get access to good training materials. And for some of you, if you're really serious about it, you might look into something like coaching.
Yeah, definitely. Every student and every investor is going to be on a different level. Some students will be able to use the membership program and use our list service and our training and go out there and be successful. But there's other investors where maybe this is the first time, or they have a huge amount of funds, or
they just want a little bit of extra help.
Yeah, exactly. That's really where our coaching program comes into play. That's where we create a lot of our success stories that we've been creating over the last year or two.
Not like that, but you think about it, in the last week or two, we've had how many different coaching students sell properties that they purchased to make money on them?
We've had about half a dozen different students over the last 2 weeks essentially sell properties that they bought and return a huge profit. And so, it's incredible. Some of these profits are 3,000 to 5,000% returns off of their investment, which is pretty. You can't always do that, but some pretty great returns. And so if you're interested, go ahead and try out our membership. It's, like Shade said, $30 a month. We offer a 30-day money-back guarantee, and we don't have that taken up very often. So it's pretty easy to do, because most people can see the value of the program, and they may stay with us for 3 months. They may stay with us for a year. It just kind of depends on the individual investor, but it's definitely the best value as far as training. I mean, even just the list service, competitive list services out there charge, over $50 a month just for their lists. That's not even including additional training and everything that we provide.
Yeah, we wanted to provide everything there in one source, one place you could go to without spending a lot, where you could access the lists, the training, everything that you would need. And so, yeah, if you haven't joined us yet, join us in the membership program, or if you're interested in looking into something else like coaching, we've got some places there on the website where you can fill out forms there to have inquiries about coaching, where we can get in contact with you or find out more about what you're looking to do, to see if it's something that we can help with or not.
Yeah, exactly. You can just go up to the services section and you can fill out any of the forms there. If you'd like to register, you can just go to the membership section and then click on the link down there. Once you've registered, we'll go ahead and send you out a username and password to the website. We'll get you set up on the email list so that you get the weekly webinar invites, and essentially we'll get you ready to rock and roll.
So hey, thanks for joining us for this Saturday morning workshop. We will keep an eye out, and hopefully we'll see all of you soon. Let us know if there's anything we can do for you.
Yeah, thanks again for attending, and we appreciate your guys' time.